Hi everyone, welcome to Values. So today we're going to talk about wheat because we consume so much of it in our daily lives that all of a sudden if a disruption happened to the supply, this creates a price shock and also creates an opportunity. So when we look at Russia as the largest exporter and Ukraine as the fifth largest exporter, and all of a sudden they're being disrupted, well, we end up with a price shock, as you see, with this massive jump in price just below $12 recently. Though it has just fallen on peace talks, so you can see what basically with Russia and Ukraine, the effects that it has on the price is huge. But so in this situation, we consider a wheat price is going to stay high, likely to be the case, because even though we don't take this massive jump into account, we can still look at the trend of this and we go, actually, wheat prices have been going up in general. So yeah, it's not likely the price is going to drop. And the price of wheat going up has just had a really, really good effect on some of these stocks, like Archers, Daniels, Midlands Company, or ADM, if you want to look up stock. And if we look at the last 6 months or even the last year, you can see the stock has just skyrocketed, and this is just for a company that's it's not even like what we're familiar with in terms of tech. If you're like me and you don't really go after agricultural companies, you might start considering them because they look quite interesting, particularly on the price action. And yeah, you look at this, it went from mid 50s to just the start of the 90s, so $91.17. It just shows there's really good opportunity in this area. And mind you, this was it started rising since July of 2021, so never mind what's happened recently. If you just consider the effects of the agricultural kind of incentives, profits, opportunities in this area, it's kind of there. And it's not just that company. Here we look at Bunge, and yeah, you can see that, hey, it's always been July. You look at the prices and you come up here and you go, actually the stock's done really well, particularly well recently, of course, since 2020, at the start of 2022. And then we're looking at the same situation here of MGP Ingredients, and you can see it is overall trending up if we discount this massive rise here. So that in general, without even the constraint that we face with Russia and Ukraine, these stocks were going up in general anyway, which kind of signals a good opportunity in these type of stocks, that there's kind of good headwinds going in their favor. Terrible for the consumer because the prices are likely to be higher. But the thing that is reality, particularly when we look at the price of wheat just continuing to go upwards. As mentioned before, wheat falls on Russia-Ukraine talks, and basically we see the prices just coming down by quite a lot, from above $10 to below. And we look at the situation of the other the US, who is the second largest exporter. So exploring those, the US, we've got farmers who are pursuing soybeans and not going to wheat. So that's one thing as well. We don't actually have an increase in production of wheat by the US farmers. So there's actually going to be a record acreage of 91 million for soybeans and less corn and spring wheat. So I think I was reading somewhere around down here. Where are we at? So rather than expand wheat planting, growers said they would pare their sowings of spring planted wheat by 2%. So it's going to drop by 2%. It would be the fourth year in a row that planting has declined. So that's the thing. Farmers in the US are not planting more wheat. They're actually decreasing over time. And then we jump to Canada. Canada farmers face drought threats as global wheat and canola prices soar. So to think one thing as well, if Canada faces a drought and in their harvest is a lot less than they expect, considering they do make up quite a large, they are quite a large exporter of wheat, as rivaling the US basically. And if they are going to be disrupted, then it is not really great on a wheat supply in general. So that's the one thing as well. I did read another snippet that was quite interesting. So demand for canola, used mainly to make vegetable oil, is relatively inelastic, meaning that a small change in supply can result in huge price change. So there we go. Canola prices will likely stay around all-time highs for another year. So canola oil, possibly another opportunity. So the beauty of research is, as you're looking for one opportunity, you find another, and in these kind of opportunities just come and present themselves. So that's why research is kind of really nice, to just give you opportunities. So if we find that like wheat's not an opportunity, we can also look at canola oil. And we look at where we at, France. So France, so apparently France is okay. They've got enough wheat to help Egypt out, which apparently Egypt announced at the start of the month that it would extend for a year maximum moisture level in wheat of 13.5%. So for an average layman, that means nothing. Like, what is 13.5%? So I had to look up this. So here we go. Okay, dry grain management means longer storage. So the less moisture content, the more you can store it for a longer time frame. The ideal wheat moisture content at harvest is between 18 to 20%. But as it says, you want to bring it down to 13.5%. So 13.5% is what's acceptable. But here, if you plan to store wheat for a year or more, you'll want to bring it down to more than 12.5%. So that's kind of the more acceptable level of where you can start to store it. So hence why a situation where Egypt announced at the start of the month that it would extend maximum moisture levels to 13.5% means they're desperate. They're desperate to get more wheat right now, and they don't mind that you can't store it for as long as you would, because in the short term they need it. So when you buy wheat with a higher moisture content, it means you're going to use it in the short term rather than storing it for the long term. So that's kind of what it means. I kind of found that interesting. I kind of like details like that where I just read a lot more into. So previously, Egypt's normal acceptable moisture content was 13%. So the tolerance of moisture content is normally 13% in Egypt. Whereas now they've risen it to 13.5. It may not seem like a lot, but in general, I guess it is a lot. So I find that's probably what I generally learned. Maybe you knew that, or maybe you learned that, or maybe it's not of an interest. But if we just come back to this chart here and go, Russia's affected, US farmers are not increasing supply, they're actually decreasing by a little bit. Canadian farmers could be half and half depending on if drought is quite severe or not. France apparently has good amount of supply, but a supply of a high moisture content. Though apparently you can reduce the moisture content just by basically getting more wind flow into that wheat and reducing the moisture. And in Ukraine has been affected. So if we look at these 5 large exporters, basically only France isn't affected, and everyone else is kind of affected, which kind of brings me back to the situation of if the whole wheat supply is going to be constrained, then it's going to be favorable on a higher price. Not favorable to consumers, of course. It's likely to contribute to higher inflation. and hence why it's an opportunity if you like wheat stocks. I will probably compile a bigger list of wheat stocks, but in case you did want to research some, you've got Archer Daniel Midland Company, which is a very long name, quite a mouthful. This one's probably easier to pronounce, and this one, MGP, is even easier, right? So yeah, I haven't really dived into the financials of these companies, but just by going by the price action in the past year, you can see there's a lot of good headwinds in terms of this kind of area. But of course, always do more research to know what the future is like, because hey, this could be the peak, and if it goes to the peak, it is on the other way down. But based on my research and based on the supply, it doesn't look like the supply is increasing that much in the near term, and there's likely going to be a bit more of, more constraints than we kind of picture, because hey, Ukraine's heavily affected. I don't think they're going to have their normal wheat exports in general. Russia, potentially, we don't know how badly their wheat exports are affected. So I will have to see how it is after that. Apparently Ukraine did put a ban on exports of wheat, because they do need it right now for themselves. So yeah, this presents an opportunity which I will talk about more in future videos as well. It gives me time to just research more into stocks as well, but I think I can conclude, in my view anyway, that wheat stocks is an opportunity worth looking into. If you've got any questions, post below. Until then, good luck investing, everyone.